What up, folks? It's Kenneth here, streamhomeloan.com, 100 years of wealth. I hope you're doing well. Thanks for tapping back in. Go ahead, like and subscribe. Let's get into it. So, just want to make a video on something that I've definitely made videos on before, but I want to harp on it because I think it's ultra important right now for not only professionals that are in the industry, but people that are looking to purchase their own home. Down payment assistance. This is big right now. Whenever the industry tightens because of interest rates, right? Like the rates have gone up, less people are in the market to, for one, refinance for sure. And then, it's harder to get people to want to purchase when rates are much higher than where they previously were. Because people definitely are always going to be comparing to what they recently saw. So when you see interest rates in the sixes, sometimes higher, some scenarios maybe a little bit lower, compared to 3% interest rates that people were accustomed to seeing back up until I'd say 2022, it tightens the market. Obviously, it raises the payment as well, making people want to hold off and see what happens in the future, right? So what lenders do in these times is to create a clientele base, or to increase their numbers. They're going to loosen the guidelines a little bit. Either they're going to lower their credit score requirements, be a little bit more flexible on income guidelines. But in this scenario, they are expanding their home buyer pool by offering more down payment assistance options. So down payment assistance, generally speaking, what it is that a lender will say, okay, let's say for instance, obviously a home purchase price, you have to finance 100% of it, either through bringing in, or not finance 100%, but you have to give the seller 100% of their purchase price, right? So either it's going to be through you financing a portion of it from the lender and then putting your own down payment, or financing a portion from the lender and then also getting a down payment loan from a lender as well. So that's what has become, that's what lenders are really pushing out there right now so that they can get more buyers into the marketplace. In the past, the common setup would be depending on if you're going with a conventional loan or an FHA loan, you're either going to do a 95% primary mortgage, like your main loan is going to be 95% of the home purchase price. And then the lender on a conventional scenario may give you a 3% down payment assistance, and then you come up with that other 2% on your own. Or in the CalHFA programs I've done before that go behind FHA loans, meaning that the primary loan is an FHA loan, we're financing 96.5% of the purchase price on the FHA loan, leaving 3.5%, to be put down. And then we're getting 3% of that on a down payment assistance program, where it's basically a silent second mortgage where it sits on the title of the property. And in the scenarios that I did, the client didn't make a payment on those loans. It was a silent second. There are scenarios where there's a small payment attached to that down payment assistance, or if there's not a small payment attached, there is an accumulation of interest over that time, even though the buyer or the borrower is not making a payment. So, there's different setups for down payment assistance, but the idea and the benefit is obviously that you get to move into the property with less money out of your pocket. So, even if a client had the money available, sometimes it's really beneficial just to move in without having to come out of pocket and be able to use that for maybe furniture or for some improvements that you plan on the or that you have on the property. So what I want to touch on really quickly, because I don't want to make this video too long, was a popular down payment assistance program that's come out recently that a lot of people hit me up on. I was getting hit up on the weekend by people asking about it. And I think it was because the media had put some information out and clients are seeing that and they're like, hey, what's this program that's giving us 20% down, right? Because like I said, generally speaking, down payment assistance programs are going to give you 3, maybe 3.5%. At the most, and sometimes they'll give you like an additional down payment assistance or additional like small loan for closing costs. I've definitely done a few of those. But when people are like, hey, there's a down payment assistance program that's giving you 20%, and I was like, okay, let me check my email. Next thing you know, I'm seeing a bunch of emails from my lenders and from CalHFA talking about the down payment assistance program called Dream for All, right? So this program, there's layers to details on this, but the general, aspect of this program is that you are financing 80% on a primary mortgage. The lender is then going to give you 20% as your down payment, and that 20% will be paid back, but it's also on top of you paying that back, there's an equity share related to this loan program. So the lender is willing to give you a 20% down payment, because not only are you going to pay that 20% back, but you're also going to give them a portion of the equity that's appreciated in the property. There's further details on it, but the reason why I didn't dive too much into it was because as I was doing my research, I found that currently CalHFA has put a pause to this program. So, this generated a lot of interest over the last few weeks, the last month, but the next thing you know, they're putting a pause to it. And I'm not sure it's because, I don't think it's because they're like, oh, we did this wrong or something like that. I think it's, they're putting a pause on it because the education requirements for it are backed up or something like that. You can check that on your own, but I'll follow up on that with some further information. But that's an interesting thing, right? So you would have to ask yourself, okay, for the benefit of having a 20% down payment, which is going to get you a better interest rate, you're not going to have any private mortgage insurance, you're not going to have any lender paid private mortgage insurance because your primary loan is under 80%, is at 80% or below. There's benefits in that, but on the backside, if your property appreciates significantly, are you okay with then sharing that with the lender? I think it's the lender, or possibly CalHFA. I don't think it's CalHFA. I think it would be the lender. So, but once again, I'll circle back with some further information once I know that this program is going to actually proceed forward. But that's just an interesting question. For me personally, I'm not sure I would want to do that unless that was my only way in. If that was my only way into the property, then, having, 80% of a pie versus 0% of a pie is always going to be better, right? So I wouldn't mind sharing in that situation. But if I could find a different way to get into the property without having to share my future equity, I would think that would be a better approach for me. But obviously it's going to be each person's scenario, depending on how they feel about the market in that area, their ability to get into a property without that down payment, etc. But that's just an interesting thing. So feel free to do research on it. It's a program from CalHFA, California Housing Finance, Agency. And I did a little research on them. I've done many loans with them. They've been around since 1975. They are organization with the intention to help out low and moderate income borrowers and renters. So they don't only deal in home financing, they deal with, renter related stuff too. And they're just really trying to create opportunities for people to have better rent scenarios, better home buying options, things like that. So that's just a brief on that. But that program, very aggressive to be giving out 20%. Definitely going to stay on top of that and find out if they're going to be returning that or bringing that program back out pretty soon, or if the halt is indefinite. We shall see. The programs right now that I've been doing the most of are your traditional down payment assistance programs that are going to go behind an FHA loan. That's what I've been doing the most of. There are ones that go behind conventional loans, but the ones I've done recently are first-time homebuyer programs where they're going to give you the 3.5% down that FHA requires. So FHA requires you to, or the maximum FHA will let you borrow is 96.5% on a primary mortgage, on a first mortgage loan. And that obviously leaves you 3.5% to be financed or to be brought in, through your own means. And in the programs that I've been doing recently, the lender is going to give you that 3.5%, and the credit score requirement is only 580. You know what I mean? So it's this is a really, really strong program. It covers full 100% of the home purchase price. And in a scenario that I actually just closed less than 30 days ago, the client was actually getting a seller credit from the builder of the property. So the builder actually gave my clients $20K credit as long as we closed by, a certain day, which we were able to meet. but they actually gave them a $20,000 credit towards closing costs. So it made it to where my client literally had to come out of pocket with nothing. They put money into they put like $5,000 as a earnest money deposit, and they were actually able to get all that back because the $20K covered their closing costs. I think they might have had to pay their homeowner's insurance. That might have been the only thing that couldn't be covered by a seller's credit. But my point is that right now there's a lot of options out there. So even though rates are a little bit higher, the benefit might be, that negative side of a higher interest rate might be offset by the benefit of keeping all your money in your pocket, right? You can always refinance in the future. Obviously, rates need to, get into a position where it benefits you for you to refinance and lower your payment, etc. But the idea is that you want to get into the property, make some improvements to it, pay the balance down a little bit, and hopefully in the next year or two, you see rates fluctuate down a little bit, and it puts you in a position to possibly refinance into a better rate. But right now, there are ways to get into homes 100%. DM me, send me a message in the comment, ask me any questions you have, and I can definitely help you out. And give you some guidance, give you some information. But hey, once again, thanks for tapping in. I'm going to be coming back with some more videos, some more information, just to stay in front of you, give you the information that you need. And really quickly, on this particular program that I did, where it was 100% financing, 580 minimum FICO score. It's a full documentation program, so both borrowers, provided income documentation, W-2s, pay stubs, tax returns. We were able to close this loan in about 18 days, right? We had initially submitted it to one lender, and the lender came back, and they had like a unique overlay that I hadn't heard from any other lender. It was kind of weird, but I'm not gonna argue. I did argue for sure, but I'm not gonna moan anymore. But they had a unique overlay that literally forced us to switch lenders mid-escrow. You know how stressful that is if you're in our industry. But the great thing is that we found a lender doing the same exact program. They looked at the guideline the way that we looked at it, the way that FHA looks at it, the way that most underwriters look at it, and we were able to get the deal done in 18 days, right? So that, these loans can go quickly. Next thing you know, as a home buyer, you can be looking at a property today and closing within the next few weeks. And the way it works is that whenever you close on a mortgage, you always, I don't want to say skip a payment, but there's always a 30-day cycle in between, or you're not going to have a payment that month. You're always going to have 1 month skip before you have your mortgage payment. So there's like technicalities within that, but you get what I'm saying. If you close in the month of, let's say, May, your first mortgage payment is not going to be due until July. You're going to skip that June payment, right? So keep that in mind. Get into a property, if it's affordable for you, if you can comfortably make the monthly payment, and there's a lot of benefits to owning a home as opposed, compared to renting. There's pros and cons to both sides of it, but generally speaking, you're going to see your property appreciate over time. You're going to give yourself some tax write-off ability. There's just a lot of different benefits, but main purpose here, down payment assistance. Take advantage of that right now. When the interest rates get better, lenders don't have to be as flexible. So they start to back off of offering down payment assistance programs. They start to tighten up on the guidelines. One last thing, usually, FHA will allow your debt ratio to max out on the back end at 56%. That means that if you make $10,000 a month before taxes, your expenses, including your mortgage, car payments, all that could go up to $5,600 a month, right? That's aggressive. Most loan programs are going to be at a 50% debt ratio or less, right? So generally speaking, when you do down payment assistance programs, they cap you at about 45%, sometimes 50% as a debt ratio. Right now, we have lenders allowing us to go to the full maximum that FHA allows, that 56% number. So that's just an example of right now they're being flexible. Right now they are expanding their guidelines so that more people can get in, take advantage, right? Obviously they want to do loans, for us, for the home buyer, for the loan officer, it means that more people can buy homes, we can close more deals while we're in a tough market. So like and subscribe, comment any questions that you have. or send me an email, kenneth@streamhomeloan.com. Let me know any questions or any videos you want me to create based on any questions you have, and I'll do it. All right, thank you guys. Have a good one.